Hello everyone, welcome back. This is Jeff Craig from Mysteel's iron ore department, here to give the latest on China's ferrous market. Let's dive in. The domestic ferrous market witnessed a general downturn this past week due to the recent tariff war between the United States and China. Despite the ongoing peak season for the downstream sector, expectations for an imminent peak in demand continue to weigh on market sentiment. In response, the central government promptly issued statements aimed at safeguarding the stable operation of China's capital markets, strengthening confidence and raising expectations for more aggressive stimulus packages to improve domestic consumption moving forward. This partially offset recent declines in the steel market. Steel market fundamentals remain relatively healthy, but the declining pace of total steel inventory reduction has slowed, with the decline in demand exceeding that of supply this past week. In particular, HRC consumption may have already peaked and has currently fallen to the lowest level compared with the same period over the past 4 years, as export orders weakened under the negative impact of tariff-related issues. In contrast, rebar consumption showed a slight recovery over the period, supported by warming temperatures and speculative activity at low price levels. Despite this, the funding situation in the downstream sector remained weak, indicating limited room for further demand growth. Integrated and mini mills further ramped up production, but this failed to translate into support for the raw materials market. Among them, iron ore underperformed, even though hot metal production continued to rise, with the operating rate of blast furnaces having already exceeded last year's peak. Combined with narrowing profitability, this is expected to limit the potential for further production increases. Additionally, tariff decisions from the Trump administration added to bearish sentiment in global markets, further pressuring iron ore prices over the past week. Although the first round of coke price increases was proposed, it failed to be successfully implemented. Total coke inventories remain relatively high, and pressure is likely to intensify amid production resumptions at coking plants. Currently, both domestic and international macro events are once again dominating market direction, creating an environment of heightened uncertainty and unpredictability. This means continued volatility and more fluctuations are expected in the coming weeks. Although bearish sentiment may have been largely priced in and could begin to ease gradually. In addition, more efforts from China are expected to offset the decline in export demand by boosting domestic consumption, which may help stabilize market sentiment. However, as downstream demand approaches its seasonal peak, steel fundamentals are expected to come under renewed pressure, which will weigh on the broader ferrous market moving forward. Thanks for tuning in to this week's China ferrous market update. See you next time.